Welcome everybody to the 40 Finance channel. My name is Jeff Beers, and today I'm going to be looking at Google stock as it pertains to 2020. Is Google stock a buy? This comes on the heels of their Q4 earnings report. We'll take a look at how they did and what are the prospects for 2020. And don't forget, if you like stock analysis, investment tips, and personal finance ideas, then make sure you subscribe to the channel. All right, looking at Google stock as a whole right now, the price sits at $1,427 as of today, and that's a little bit of a turn down from their earnings that came out just yesterday. There's a little bit of bad news mixed in with the good news. We'll take a look at that in a second. But from a fundamental standpoint, you got a current PE ratio of 28.61. The forward PE is projected at 26.11. And you see over the past year, it's been a really good year for Google stock. And it's grown up as high as $1,500 here just recently. So a lot of good returns, slow and steady returns from Google. Their profitability is phenomenal. They've got their hands in a lot of different places trying to build up and away from search, just search and search advertising. But there were some cracks in the foundation as we look at their earnings report. All right, so this is a summary here of the big news items from Google's earnings report. Revenue came in at $37.5 billion. That was versus the expectation of just over $38 billion. So they got a miss there. Now the earnings per share came in at $15.35 versus $12.49 as expected. So that actually was a win. And the big news coming out of yesterday's earnings call was YouTube. They debuted their YouTube revenue for the first time. And for the fourth quarter, it came in at $4.7 billion. That put YouTube's revenue for 2019, all of 2019, was at $15 billion. Now that's a pretty awesome company just by itself, or business line just by itself. However, since they just released it for the first time, it finally answers the question on what is YouTube worth. And all the rumors and analysts and newsmakers had it valued around $25 billion for 2019. So when they looked at the 2019 number, the actual at $15 billion, there was a little bit of disappointment. And that's why you're seeing some of the downtick in the stock, not only from a pure revenue miss, but also there was hopes that, I guess, YouTube was insanely bigger than it already is. So you'll see some negative news in there. Also, on the cloud front, Google's doing a very good job on the cloud as a standalone business and where they grow. They're at $2.6 billion for Q4. However, the competition is outpacing them. So anytime you get a line item, people are going to compare it to the rest of the industry. I put on here that AWS did almost $10 billion in the same quarter. So there's a little bit of meh with the $2.6 billion that Google brought in. But again, if you're looking at it from just a Google perspective, and is this company doing well? Is this company making profits? The answer is yes. The only problem that you have right now with the slight downturn in the stock price is just that analysts were expecting more at the bottom line. Okay, so coming off of, call it a mixed bag Q1 report, where do analysts stand today? And looking at the tip ranks dashboard, which has been refreshed since the earnings report, and a lot of the top analysts have sort of reiterated their opinions. The median target right now for Google is $1,610 over the next 12 months. That is a 13% upside from where we stand today. And similar to the Amazon stock that I looked at a couple days ago, you have 27 analysts who are all saying the same thing, and that is Google stock is a buy. You have no holds, no sells, a high bar of 1800 for a target and a low bar of 1400. So most everybody's in unison that, hey, Google's still a good business. Google stock is going to continue to go up. I think the only reason that you would read in the news that there's any negativity, it's just that some people expect these companies, to just absolutely explode, and that's not always the case. And also we should point out that we're talking about one quarter here. Okay, not an annual statement, a quarterly earnings statement. So if you're just a regular retail investor, this is the kind of news and these little downturns that you might say to yourself, hey, I'm long on Google. They just woke up with, whatever it was, 5% discount. Maybe you hold off for a week or two and see if it continues to go down. And if so, you might want to pick up some shares. All right, so I put together a couple cases for Google as far as looking ahead from my opinion. The bull case is pretty simple. It's almost like business as usual plus. So the bull case, in my opinion, is search and advertising revenues continue to grow over 10% per year annually for, call it, the next 5 to 7 years. That's a great case for the stock. The growth engines, if you will, come in from YouTube and cloud sales. Both of those have to continue to hit, plus 25, plus 30% annually to show that these are the growth engines that are powering more revenue in the future. And then the long-term bets that Google has that they don't talk about publicly as much, but most people know about them. They have a whole nother arm of their company where they sort of experiment and fund different ventures. The biggest of those would be Waymo, which is a driverless car technology or driverless computer technology that you can put into things like taxis, cars themselves, and probably the biggest one is starting to think about freight hauling, right? And the massive amount of semi-trucks and freight transport that's on America's roadways today, let alone global roadways. And that's really where Google's targeting to get this Waymo to pay off, and that is in freight transport. So you can imagine what would happen if that was anywhere near successful over the next, call it 10 years. You have an opportunity to really make some big money. So those are all the positive things. What's the bear case? And I think, quite honestly, the bear case for Google is pretty simple to figure out too. You have the world of search and advertising, in particular search. I think Google's doing a good job of reinventing search with things like voice search, the home applications, speakers that you can talk to and get information. Obviously the search is involved with Maps and YouTube and Google Local, and all those things come into play. And so I think that world, they've done a really good job of making it more interesting, more impactful. However, if something comes along and search changes dramatically, say in the neighborhood of voice search, if somebody big were to invent a better voice search assistant, then you could see some declines, which would affect advertising declines. Another part of a bear case would be if YouTube got hit. Not only from a growth standpoint, but there's so much litigation around YouTube as far as what videos can be shown, copy holder rights, music rights, violence, things like that. If YouTube got hit hard, similar to how Facebook has, then you're obviously looking at a risk. But similar to Facebook, Google has invested a lot of resources into improving the safety of YouTube and helping shield children from some of the content that they don't, that they shouldn't be watching, right? So there's been a huge investment in YouTube for Kids. Whether or not that pays off remains to be seen, but they are definitely a big consumer of YouTube's content. And lastly, the other elephant in the room for Google at this stage of its company is antitrust investigations, right? And Facebook and Amazon are going through the same thing. But the government really seems to be focused on Google right now as far as putting together a committee to go after Google, or at least investigate Google to see if they're using their internal synergies to keep competitors out, okay? So one easy example for that would be, let's just say, travel and vacation searches. Is Google manipulating the search results outside of the way it normally does things to allow their partners and interests to rank better in Google search results? If they are, and it's not sort of a clean slate of how people could get into it, then you have some major antitrust litigation on the way, which is obviously expensive, and it takes a long time, and it could interfere with their daily operations. My personal take on the antitrust stuff is it's big headlines, big politicians talking and flapping their gums. The worst case scenario that I see that would ever happen, at least today, when looking at it from what I've read, is a hefty fine, similar to what Facebook paid to Europe. And I think what we know about Facebook's experience is, writing a check, saying that I'm sorry and doing your best to improve is usually where things shake out and stuff like this. Don't forget that Google, Facebook, Amazon are all taxpayers, job creators. They benefit America in certain ways, so politicians have to be careful about which companies they want to take down. All right, guys, so at the end of the day, at least in my camp, Google is definitely a buy for 2020. I think, like everything else, you look for opportunities like the drop that we just saw after the Q1 earnings. You add to your position. If you're looking for another way to get into Google stock with pretty easy to find an ETF or an index fund that's going to include Google, and that certainly is a safer play, although you could balance the safety with less returns if Google was to, hit something big like Waymo and growth started to accelerate. But either way, I think that there's a lot of reason to invest in Google in 2020, and so that's my opinion. Hope you guys enjoyed this video. Please give me a like and subscribe. I'll see you on the next video.